What are contingent assets? What are examples of contingent assets? What are the key requirements of IFRS number 19 in relation to contingent assets? That's what we are going to discuss next. Contingent asset. What is a contingent asset? Contingent assets. Now, a contingent asset is a possible asset. It is, first of all, a possible asset that arises from past event. It is a possible asset. First of all, it is a possible asset that arises from a past event. It is a possible asset that arises from a past event and whose existence will be confirmed only by the occurrence or non-occurrence of uncertain future event, not wholly in the control of the entity. Do you understand? If you understood contingent liability, then you can relate to what we are now talking about, contingent asset. It is a possible asset that arises from first of all, a past event. It arises from a past event, all right? Such event arises from a past event, first of all, a contingent liability. It is a possible asset. It is a possible asset. It is a possible asset that arises from a past event and whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events not wholly in control of the entity. And just like contingent liabilities, contingent assets are not measured. They are not measured but disclosed in the notes to the financial statements. Now, to help us understand better, I'll give examples of contingent assets. Examples of contingent assets. What are examples of contingent assets? One example could be proceeds from a legal or pending lawsuit. Let me say pending lawsuit. Proceeds from a pending lawsuit. Proceeds from a pending lawsuit. Proceeds from a pending lawsuit. One, proceeds. A pending lawsuit, litigation. Proceeds from a pending lawsuit. Now, a company may be involved in a legal or may be involved in a lawsuit against a competitor. That's an example. A company where a company is involved, for example, in a lawsuit against a competitor. If the company wins the lawsuit, against the competitor, it could be awarded a significant financial settlement. And therefore, in such a case, the company has a contingent asset for the potential proceeds from the lawsuit. And therefore, the company should disclose the contingent asset in the notes to the financial statements, because it may not be possible to measure what the cost will award in terms of maybe damages or the financial settlement. So we've said that contingent assets are not measured, but they are disclosed. So the company, such an example, is required to disclose in the notes to the financial statements. The company or the public sector entity is required to disclose proceeds from a pending lawsuit. That's an example. Another example is insurance claims. Number 2, insurance claims. Insurance claims. So a company or a public sector entity may be awarded some money as a result of damage, may be compensated or indemnified. Insurance indemnity, that can also be considered as a contingent asset. 3, tax refunds. Tax refunds is an example of a contingent asset. Tax refund. Government grants. Government grants can go on and on. There are several other types of contingent liabilities. We may also have contingent consideration from a business acquisition, where a company is required to get some money as a result of business acquisition. Contingent consideration from business acquisition. Contingent consideration from business acquisition. Business acquisition. So these are examples of contingent asset. Proceeds from a pending lawsuit, insurance claims, tax refunds, government grants, and also a contingent consideration from a business acquisition. We've defined a contingent liability as a possible asset that arises from past events. It firstly arises from past event that arises from past event, and whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the public sector entity. And we've given examples. So we now move on to study recognition of contingent assets. Recognition of contingent assets. Now, a contingent asset is recognized when a certain criteria is met. Just like the contingent liabilities, there is a criteria, or what we may refer to as conditions. And the first criteria is that the entity should have a possible asset that arises from past event. Possible asset that arises from past event. Possible asset. Proceeds from a pending lawsuit is a possible asset. At the moment it's not, but the company may win a lawsuit against a competitor, and after winning, then that money, cash, becomes an asset, but in future. Insurance claims. This is a possible asset Tax refunds, possible assets. Government grants, possible assets. Business consideration from business acquisitions, possible asset. So the first criteria is that there ought to be a possible asset that arises from past event. Past event. The second criteria is that the existence of the asset will be confirmed. It will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. It's just like the contingent liabilities. Another criteria is the same as the criteria used when recognizing contingent liabilities. The existence of the asset will be confirmed only by the occurrence or non-occurrence. Occurrence or non-occurrence. The occurrence or non-occurrence of one or more uncertain future events. One or more uncertain future events. For example, proceeds from a pending lawsuit. This may occur. The proceeds from a pending lawsuit may occur in future. May occur in future. The company may receive these proceeds in future. So this contingent liability depends on the fact of the court awarding the company a financial settlement as a result of its lawsuit against a competitor. And you can see the occurrence of such event is not wholly within the control of the public sector entity. It's not wholly. The awarding of these proceeds is not within the control of the entity, but it's within the control of the courts. The third criteria is in relation to the inflow of resource. If it is probable that an inflow of economic benefits will result from the occurrence of the uncertain future event. Inflow of economic benefits. There is likelihood, if it's probable, that there will be an inflow of an economic benefit resulting from the future event, then that's another criteria that can be used by public sector entities in recognizing contingent assets. In recognizing contingent assets. We are now going to study measurement. How are contingent assets measured? And as we have already mentioned, contingent assets, just like contingent liabilities, are not measured, but they are only disclosed in the notes to the financial statements of public sector entities. So I've already answered that question. Contingent assets are not measured. They are not measured. Just like contingent liabilities are not measured, but disclosed in the notes to the financial statements. Are not measured, but they are disclosed to the notes in the financial statements. Lastly, disclosure. What are the disclosure requirements for contingent liabilities? Disclosure. Now, public sector entities are required to disclose certain information about contingent liabilities in the notes to the financial statements. The first information that ought to be disclosed is the nature of the contingent liability. The nature of the contingent, nature of the contingent disclosure requirements. What are the disclosure requirements? Now, candidates, public sector entities are required to disclose certain information about contingent assets in the notes to the financial statements. One is the nature of contingent assets. The nature of contingent assets, that has to be disclosed. There also to be a description of uncertain future event on which the asset depends. A description of a future events on which the asset depends. That also ought to be disclosed. The description of future event on which the asset depends. Then there has to be an estimate of the financial effect of the contingent asset. There has to be an estimate. The entity should be able to estimate the financial effect of the contingent asset. The estimate of financial effect of the contingent asset. Estimate of a financial effect of a contingent asset. That has to be disclosed if practicable. Now, candidates, in conclusion, public sector entities should carefully manage their contingent assets. They should carefully manage their contingent assets. And they should disclose such assets in their financial statements in accordance with International Public Sector Accounting Standard number 9. So that effectively brings the lesson to an end. We've covered the key requirements for provisions, contingent liabilities, and contingent assets. I'm going to give you today's revision questions based on International Public Sector Accounting Standard number 19. The first question is in relation to recognition and measurement. Number 1 reads, how does IFRS 19 guide the recognition and measurement of provisions in public sector accounting, especially regarding the criteria for recognizing provisions in financial statements? Number 2, what are the key principles outlined in IFRS 19 concerning the recognition and disclosure of contingent liabilities, and how does it differentiate between contingent assets and provisions? Number 3, in what ways does IFRS 19 address the treatment of contingent assets? That's one question. In relation to that question, another question is, what criteria must be met for contingent assets to be recognized in the financial statements? Number 4, what specific disclosure requirements does IFRS 19 impose on public sector entities regarding provisions, contingent liabilities, and contingent assets in their financial statements? Number 5, how does IFRS 19 recommend handling changes in estimates related to provisions and contingent liabilities? What are the disclosure requirements for such changes? Then lastly, what are some of the common challenges or complexities that public sector entities might encounter when applying IFRS 19 in practice, especially in determining the existence of measurement of provisions and contingent items? These are your revision questions. Make sure you attempt the questions. If you have any question that you may want to pose, feel free to do so. Below this video, there is a comment section where you can post your questions. You can also get us on our lines. You can write to us. You can call us if you have any query regarding the lessons. Thank you for attending the lesson. In our next session, we are going to proceed with the topic Public Sector Accounting Standards. Thank you. God bless you. Bye-bye. you.